Hi, this is Mark with your analysis for the week commencing the 22nd of January. I showed you last week how on the Euro GBP I was waiting for a pullback, and whilst price was down in this area here, initially I was looking for 83.20, which we got on Tuesday morning, and then on Wednesday's update I warned with the Euro that I said that all Euro pairs looked to me as though they were starting to look a bit more bullish. So on Wednesday's update I said to you I was considering shorts at 83.70 on the Euro Pound, and it did it almost to the pip, and we are now currently, those of us who are in this trade, up approximately 70 pips. So this was a move where we were planning back down here. We needed the pullback. We had an initial opportunity here to make a profit, but this one was the better one of the two. And the reason why I like this, go back to Wednesday's post and have a look and see how I explained in detail, but we had previous major support and resistance. You can see here an upper trend line and 78.6 fib of the recent moves. In other words, a textbook trade. The other point to note here is I revised my decision on trading on Fridays last week, and I said that I would now consider trades on a Friday morning prior to New York, and this move happened around the London Open. I actually got in on Thursday evening when price was up here. So that was a well-planned trade, and we traded the plan, and if you took that trade then there was decent profit in it. Equally with the Euro Yen last Sunday, price was down here. I said to you I would be interested in the Euro Yen if price drifted back up to around 100, and on Thursday to the pip it touched this upper area and bounced away. There was further movement up, slight movement up on the Friday morning, and again this is currently 45 pips in profit. And again these are trades planned from the Sunday before, and then some amendments on my Wednesday update. And again, if you're not sure why I wasn't looking to short down here, then go back to last Sunday's analysis. This is the CAD. Now last Sunday I was talking in terms of the CAD of a triangle breakout, and I explained I was actually thinking it was going to go up at this point. It was beginning to look bullish, and I explained that what you do is you look for a break and close above or below a trend line, and on the very next candle, certainly the one after, you look on for a pullback to that trend line. Now I caught this Wednesday morning, and in my Wednesday morning update price was down at around 101.40 I believe, and I said to you if you had missed this opportunity then consider pullbacks up to 101.60, and it went through by about 10 pips and stops above here, and I explain all the reasoning. And again look in Wednesday's update, and I explained my target was down here, and I'd gone 100.65 and it missed my target, the damn thing, by 2 pips. But I was taken out a bit further up here. So a winning trade, and again a winning trade planned, starting to plan last Sunday and then updated on the Wednesday once we had the movement. This was an extremely good week for me, and a lot of this analysis, as I said, was done on a Sunday when you've got plenty of time when the markets are closed to plan and plot what you're going to do for the week ahead. Equally the dollar Swissy. Now the dollar Swissy last week price was up here. I explained why I wasn't looking to long and I wanted a pullback. My initial area for a pullback was 9400. Once again on Wednesday I said because the euro looked bullish I feared that this was going to pull back further, and I was cancelling the plan to long here, and I said I would look to long at 93.20. Well, spookily price came down, stopped, hit the 78.6 pip to the pip, bounced through a little bit and back up, and this was at one point on Friday up about 50-60 pips. I still have the balance to run and my stop now to entry. Final one, Euro USD. Now during the week I was at the Sunday close I was thinking in terms of a pullback to 128.50. On Wednesday I gave you lots of reasons, and once again look at Wednesday's video and look at the analysis as to why I said I was no longer looking for a short at 128.50. Now it doesn't show here on the daily, but there was actually a bounce here of 30 or 40 pips. But the reasons, as I say, I explained that there's 5/8 crosses, there was stochastic rolling up, there was MACD divergence. There's a lot of reasons, as well as basic fundamentals, why I believed that the euro was going to turn back up again. Final ones now, we have the Aussie dollar. Now the Aussie dollar, what I'd said was look for a pullback down here to 1.0020 and a 30 rather. I missed my entry by about 18 pips and then pulled away upwards. What it has done is made a break out of this upper trend line, and that is a major move in my opinion, and that is why for the week ahead I'm now going to be looking for a long here after a pullback. I will show you in my analysis that follows what I intend to do with this Aussie dollar for the week ahead. This is the Euro USD on a weekly chart. I explained in Wednesday's update lots of reasons why I was very concerned, wary with the euro, and I felt it could pull back further. It did do, and you will see on the weekly chart this candle formation here. This is a bullish engulfing candle in that the whole of the body of this candle has exceeded the body of this candle, and by a considerable amount. The other significant thing here is on this weekly chart we have broken above this major support resistance area of 128.70-75 area. You can see here back in November how it was major support. There was also interreaction earlier in the year, and then a few weeks ago we had this bounce back off. Then we had support became resistance, so this was crucial. It's now broken here. What didn't do, it didn't quite get up to 130, which is the next logical area. So really we're in a bit of no man's land at the moment, and this is when you hear the experts saying that they are neutral on a pair. What that means in non-technical speak is they have no idea. Let's look on the daily. This is the daily euro. Now the daily euro, this shows this a little clearer, I think. This was where we'd gone through the 128.75, we went through the cycle level of 129, which was also 61.8, stopped virtually to the pip on 78.6. Now for me in a move, unless the 78.6 is broken, I am still looking for a short, and my overall bias with the euro is still to short, but there is a danger this is going to go further up first. So I think the best thing to do is we'll look on Wednesday for a further update. The difficulties are that now we've broken through this 128.75, 129 area, we may just get trapped between 130 and 129. Best thing to do is let's watch and wait and see what happens. But I will be interested to short if we get a further pullback up around this 31.35, 31.50. This area here I would be interested to short. And if we look on the weekly chart again, you can see that this area here, if you look across to the left here, 31.50 was a major support area in the past, 31.90, 3200 was major resistance, and we have this trend line break. So this area here is where I will be interested, but I am a bit vague on the euro this week. I will declare that I am neutral. This is the British pound. And the British pound on a weekly, once again, this is a bullish engulfing candle. We have a 5/8 cross almost forming, and we have MACD divergence. In other words, here price was static and the line was horizontal for support, and on MACD it was actually going up. So these were all clues that we were due a bounce, which is why I was not looking to short at this point here, because it was a double bottom, as explained in last Sunday's. So for me, on the British pound, once again on a weekly chart, until it breaks above 78.6, I'm still looking for shorts, and my main area for the British pound for the week ahead is 158.00 for potential shorts. It is a fib, although a minor fib. It is major previous support and resistance area, and we have these weekly EMAs rolling over, which will all be converging in this same area. At the moment, the weekly Bollinger Band is a never in a million. This will come down probably to around the 61.8, so perhaps the stop above this area. But that will be my first point of call for the British pound. Here on the daily, you can see how on Friday, price stopped to the pip off this 78.6 fib with the 55 EMA just above. So you may be able, at market open, to find a move short from this point. But as I said to you and showed on the weekly chart, this is another one where I'm not quite neutral, but I am of a mind that we may have bigger pullbacks. And if you're trading intraday, the things you need to look at, the next one up is 157.00 because, again, previous support and resistance. But for reasons I explained before, 158.00, lots of things going on, that will be my area. And last week I showed you how there were lots of potential triangle breakouts on pairs, and I showed you on silver that we were looking as though we could have a break of this upper trend line, and we've got it. I don't trade gold and silver per se, as I hold a precious metal. Gold has not quite broken the upper trend line, and it is still stuck at this upper resistance area, but the Bollinger Band has opened. Watch that at market opened. But the way I do trade gold is via the Aussie dollar. And the Aussie dollar on a weekly chart, we've had this potential triangle break in place now for many weeks, and price significantly last week has broken and closed above this area. And this area of 10044 is not only an intersection of the trend line, it is also major support and resistance. See here, price stopped, resistance, support, etc. This is hugely significant, and on a daily chart we can see that the Aussie dollar is looking bullish. All the EMAs have now turned over. The perfect place will be if we can get yet one more pullback down to a trend line. The way I'm going to play this is this. Sometimes I will scale into a trade, and what I do is I take the overall risk and then I split it in half, because my technical analysis, my normal area for entry I will be looking is around 10440, but there is a danger this is going to pull further back, so I'm going to take half of my trade at 10440, and the other part of the trade I'm going to come back down here to 10370. And once again, if you look across, we have support, resistance, support, all of it a little bit messy within there, but that's the area I'm going to look to with my stop the other side of this trend line. There is a potential here for a very big move up on this Aussie dollar, and therefore I don't want to miss it. Hence I will go in half here, but I will also go in half here. This is the CAD. I showed you last week in great detail. On the Wednesday I showed you how I'd entered the trade and how I thought 160 was a good place to short. CAD, as ever, bounces up one week and down the next. What I am interested now is I'm out of the trade, I got taken out, and therefore I am interested for potential shorts again up around 10180. The 34.55 is rolling over. Lots of technical reasons. We've broken this trend line. That for me is the area for potential shorts for the CAD for the week ahead. Euro yen, I showed you last week, I was looking to short 100. If you've missed it, then that is the major whole number on this pair, but it is looking a bit bullish. Here on the weekly, you see once again a massive bullish engulfing candle. Stochastics still in the oversold position, beginning to roll up. MACD divergence, same on a lot of euro pairs is this. So once again, there is a danger this is going to go further. If you're not in already, I would be more interested in shorting at 101 if it pulls back up here. 78.6 fib up above. You can see how it was major support going back, and we've got the EMAs in the area, and the Bollinger Band will come down to this area. So 101 would be of more interest, but if you're trading intraday and sat watching your charts, look at 100 again on a 4-hour chart or even a 1-hour chart. Similar scenario with the euro pound. This is the move I showed you from last week. Perfect entry point here. Was price stopped just above this monthly 55 EMA, which is major, and often you will find price will touch a monthly EMA, bounce off, and then give us an entry. If you have missed this entry, then 83.70 would be the best place to be looking. But if price only gets back to around 83.50 and stalls, then be considering shorts there, because once again we have support and resistance. This is a bit messy to the left here. We have 61.8 fib of a recent move. Watch the Bollingers, let's see what that does, but if that keeps to come down, this weekly 200 will keep coming down. So stops above this area, and first potential area of interest, if you've missed it, is around 83.40. Aussie dollar yen, it has broken an upper area, and it has broken significantly the daily 200, which means I would now only be interested to long, because the other thing it has broken is 80, and this is the first time we've had a clear break and close above 80 going back to October time, I believe it was. See here how major resistance around 80 back in November, and again the other week price was coming up near, we're through. So woohoo, off we go. I will be interested to long around about 80. My only doubt with this is this weekly chart. And as you can see, price has slammed into and stopped to the pip on a weekly chart at the 55 EMA. So consider pullbacks to 80 with a view to a long. Bear in mind it may only get to 80, 70 area once again. Watch this space carefully. What I will do is long at 80, 80, 10 and take off most of my position around 80, 65 with a view to then letting the balance run, and hopefully the balance will run up to this weekly 200 EMA. Dollar yen, still not interested, still bobbling along. There was a fake breakout on Thursday, Friday, price stopped to the pip, bounced back down to this 55 EMA. So hopefully you've seen from the video today not only how we plan trades in advance, and I showed you in the earlier stage how last week's trades were spookily accurate and we had lots and lots of winners last week, but equally how important Fibonacci has been, how important support and resistance is, and how important mobile support and resistance, namely moving averages, because that is what they are. Have a great week. Check in again with me on Wednesday for those of us you who trade during the week, because at the moment things do change on a daily basis. There is still weekend meetings of the Greek situation going on now, and that could mean anything could happen on the euro, anything euro related at market